Welcome. In our first video, we looked at understanding cash flow forecasting. Now we're going to be looking at setting up an actual template with speed and efficiency. Let's get into it. All right, so here we go. This is the cash flow template that we have set up. We have set it up for speed and efficiency and to provide a reliable system for when you're under pressure and need to deliver. So you will see that I've used 6 sections to simplify the setup and for ease of memory. 6 sections. The first section has to do with our labeling, the name of the company or business that we're focused on, obviously, the cash flow projection, which is our title, and we're doing it for 12 months ending December 31st, 2020, all hypothetical, of course. The second section has to do with our cash inflows, all the incoming cash into the business, and we will explain a little bit more about that shortly. The third section is our cash outflows, all the cash going out of the business, and our next section is the net cash inflow outflow, net of our cash inflows against our cash outflows, but we will delve into that shortly, and then followed by our opening cash balance. Very important. We want to ensure that the cash that precedes the start of the cash flow, the cash from the preceding period, is always captured, so that can be recognized in the cumulative cash balance for the entire 12 months. And then last, but certainly not least, and in fact the most important, is the closing cash balance, the all-important balance that we're trying to calculate, and we want to calculate it with precision. All right, so that's the first step. The next step that we want to bear in mind, and I always remind my students, that structurally we want to understand how these statements or templates are set up so that we can easily recall under pressure. With the cash flow statement, apart from the 6 main sections that I spoke about, bear in mind that there are also 3 main columns, and the first one here is my descriptive column. The second column represents my periods under consideration. So in this case, it's representing 12 periods or 12 months, but it could be 12 days, it could be 12 weeks, just to bear that in mind. And again, just to clarify, guys, what I've done is represented it here in the simplest of ways. In real life, what you would have are the actual columns in the spreadsheet right up to period 12. So just bear that in mind. All I've done here, guys, is represented it like this for simplicity. And thirdly is my cumulative total column. All that you should be trying to do here is to capture the cumulative total for the 12 periods under consideration, where appropriate, obviously. All right, so let's dig a little deeper. We're getting somewhere. On the cash inflows, you will see that I have inflows and I've tagged it X. Now bear in mind that, again, this is just for simplicity, but in real life, we could have revenues from the sale of our products or services. It could be proceeds from a loan that we have just taken out. It could be incoming cash from a new investor. It could be incoming cash from a sponsorship agreement. It could be a number of things. For simplicity, I've shown it as X here. Going on to my cash outflows, I've designated it Y or tagged it Y. And of course, my inflows can be many. Salaries to my staff. It could represent additional purchases for my inventory, for my fixed assets. It could represent payments for my utility bills, a number of things. So all the flows going out would be captured here. Again, for simplicity, I represented it as Y. All right, so getting a little bit more important now. The net cash inflow outflow is the next section, and that is represented or tagged as Z. And simply put, it is the total or the sum total of my cash inflows offset against the sum total of my cash outflows. And see, I have a simple formula here. It's X minus Y. X minus Y. Total inflows minus my total outflows to give you my net or your net cash inflow outflow. Next line, next section, again is my opening cash balance, and I'll explain a little bit more about the opening cash very shortly. Lastly, again, but most importantly, is our cash closing cash balance or cumulative cash balance, represented by Z plus W here. And so that simple formula is my net cash inflow, represented or tagged as Z, plus my opening cash balance, tagged as W, to give you the total cash balance or the cumulative cash balance, Z plus W. Alright, so there you have it. That's really the structural setup of the cash flow projection statement. Always remember the structure of it so that under pressure you can easily recall and have it done in a speedy manner and done as accurately as is possible. Alright, so we're going to look at the opening cash balance and how we eventually get to the closing cash balance. That can be a little tricky, so I just want to spend a couple minutes explaining that. Alright, so really it's explaining the transition from our net cash outflow to our closing cash. And I've just set up a very simple representation of that particular section of the cash flow, just captured by period 1, period 2, period 3, and of course my descriptive items here: net cash inflow, outflow, opening cash, closing cash. Alright, so if hypothetically I have summed my total cash inflows and I have subtracted from that my total cash outflows, and my net result is net cash inflow of $1 million, I record here. Alright, that is how it would be done. Then this all important figure here is the cash coming from period 0, not from period 1 now, from period 0. So we would now have to have some way of discerning and calculating what was the cash at the start of the period. So this is where that 100,000 would have come from. And so the closing cash at the end of the first period would be 1.1 million. See that? That is how that cookie crumbles. In period 2, again hypothetically, I've worked out my net cash inflow to be $2 million. Interestingly now, this opening cash comes from my closing cash from the previous period. This opening cash comes from my closing cash from period 1. So all told, at the end of period 2, the cash, my cumulative cash, would be 2 million plus 1.1 million to give me a cumulative balance of 3,100,000. Alright, so hope everybody is following that. In period 3, hypothetically I've worked out my net cash inflow to be just 100,000. The opening cash for period 3 is my closing cash from period 2. Follow that? And so at the end of period 3, my closing cash becomes $3.2 million. Alright, so we just really need to understand that little trick and ensure that we're first of all picking up the cash coming from period 0 or month 0 to work back what our closing cash is for the first month or first period, and then now that becomes our opening cash for period 2, our opening cash for period 3. Alright, So I think we have made some progress. So we have just covered the cash flow template, and we have looked specifically at the transition from the net cash inflow outflow through to the opening cash balance, right through to the closing cash balance. Hope you found it interesting. Managing cash in the corporate setting on a day-to-day is a very important task. Really a very important task, and a task that is not to be taken lightly. I often ask students and even employees, what would they prefer in their own businesses? A situation with growing profits or growing cash? And naturally, sometimes I get the response that they would prefer growing profits. And that's okay. The truth though is, and you should always bear in mind, that revenues are sometimes made up of raw cash and sometimes credit transactions. Those credit transactions sometimes go bad, which is where the problem comes in. So it means that in the short run, even though you may be booking your revenues and booking profits, the raw cash in the business is not necessarily growing and maybe giving us a false sense of comfort that you're in a very strong financial position. The beauty with cash is that there's no second guessing. If cash comes in, it's recorded in real time, and soon you will realize that if there's enough cash, if the cash is growing, if there's a surplus, then you can certainly take care of your obligations as they're falling due. But in addition to that, you also have the flexibility of engaging additional investment projects. You can expand into new products and services, or you can take on new geographic markets. There are many things you can do. The lesson here is that we should all take the management of our cash very seriously, and we should ensure that our best resources are in place to manage our cash and to report on the status of our cash in the most accurate of ways. If we know our cash, we will know that cash is king, and we will manage it as such.